If the panel can join me, that would be great. We've got a super panel here. If you make your way up, that would be great. We've got Vanessa Gelado, Senior Managing Director and Head of Spain and Portugal for Heinz, who I'm sure everybody knows, and I'm sure everybody knows everybody here. We've got Fred Jariel, who's Co-Head of Real Estate for TKO Capital. Juan Acosta, who's Chief Investment Officer for Rockfield Real Estate. Duarte Suarez Franco, who's a board member of Habitat Invest. Francisco Rivera Cari, who's an Executive Board Member for Caixa Geral de Depósitos. And just in time, there's also me. Let's just do a quick, and by quick I mean 1 minute, kind of just introduction of particularly what your strategy is, because I think that's going to be of interest to everybody here. So 30 seconds to a minute on the strategy. Vanessa, let's start it off with you. Let's see if you can be under a minute. Vanessa.
Thank you very much. I'm with Heinz. We are currently, for the European footprint, covering from core to core plus to value add. Our funds are actually multi-asset. We are present in the 4 major food groups. And we just completed our first transaction in Portugal in April of this year in PBSA.
Great. Juan.
We are a vertically integrated platform in the living space. That means we are active in student housing, residential, and hopefully senior housing. And most recently, we have been very active on our new pan-European student housing fund, which has a core profile, is probably the first of its kind. And we are very much looking forward to do our first investment in Portugal.
Great. Fred.
That's okay, we'll try. Yes, it's working. So I personally fall in love in Portugal in 21 when we start, our great venture here where we bought 4,000 granular residential across Portugal. Then we move up, to development, resi redevelopment, BTS and BTR. And yes, I hope we will see more BTR activity soon because we'll have some for sale. We do also hospitality and even a strange thing, we are converting a shopping center into office. So.
Okay, great. Interesting that conversion part. Duarte.
Duarte Soares Franco from Habitat. We work with the institutional and family office. We are investing right now in large-scale projects for medium class and also hospitality.
Super. And last but not least, Francisco.
So I am Francisco Cari. I am with Caixa Geral de Depósitos. Caixa Geral de Depósitos, as most of you know, is the largest Portuguese bank. We are involved and focused in a senior lending for all real estate sectors and segments, with a particular focus on the residential side, mostly built to sell, which is then integrated with our large business of mortgage lending, where we are responsible for about 1/4 of the market in Portugal.
Great. So we've got both financing, but also investment, looking at also different types of capital and also different strategies. Let's just start off with the simple question of where you're seeing the opportunities at the moment, particularly in the Polish market. Polish market? What am I talking about? Yeah, that's just a personal interest for me, obviously. In the Portuguese market. Vanessa, let's start with you.
We also invest in Poland, but we're going to leave that for another day. So listen, I think our current Portuguese strategy is very much focused on the great metropolitan areas of both Lisbon and Porto. We've started with Porto, but we would be delighted to obviously invest here in Lisbon. We are very much focused in the living space in PBSA. That's where we're gonna start. We have our own operator, so I think that makes that a bit easier to kick off. And beyond that, we would also love to invest in logistics and in retail.
Okay, and that's interesting because I think it's useful to get that in the context of the other sectors as well. So Fred, anybody feel free to come in on where you're seeing the opportunities and where you are investing in other areas or financing other areas. It'd be good to get how you see that in that context.
And we are, investing across asset class, here in Portugal. And yes, I agree with the comment, which is, pig can fly, right? Because, Portugal and Spain are really a strange animal versus the rest of Europe, right? Prices are increasing, you can do sell, and the market is performing very well versus the rest. Here in Portugal specifically, so as I said, we think living is a great asset class. There is a big imbalance. We think BTR is going to be a good asset class because there is no supply and no deal, but we hope that this is going to change. And obviously, we think that office in the right location, just like in anywhere else in Europe, is something good to do because no one is doing it, right? So we prefer to do the things that the others are not doing, to be honest. And that's why we plan to do the best office in Porto. So, it's really deal-related.
Okay, good. And Juan, it'd be interesting to pick up your views in terms of Portugal, but also, I suppose, where you're seeing that opportunity, like Frederick mentioned, are there specific niches within the sector where you're finding more opportunities or where you think there's a sweet spot at the moment?
Yeah, I think the low-hanging fruit, as per the presentation that we just saw, is student housing. I think the numbers are stacking up, the fundamentals are good. I think the challenge for housing in general is how to access, right? Heinz is a great developer with a great core plus buyer, so I think that's going to be my first goal to Vanessa. We like portfolios and platforms. If we can buy companies, we will do that, right? And then on perhaps on a different note, I think given the constraints that we have on housing here about VAT, regulation, and construction costs, I think new strategies like flex living and co-living, they might find a good ground to be explored, right, and provide an alternative to the residential sector, which is a little bit more difficult to access.
Okay, good. And I was interested, in terms of the mixed use element of that, and how you see that in terms of building in the residential side. I suppose what enables that to be scalable? What are some of the key things there?
Right now, the biggest problem for institutional funds in Portugal is the dimension of the market, because you have a lot of projects, but the equity that you need to deploy there, it's quite low, and mixed use can diversify a little bit the risk and increase the ticket and equity that you can deploy in the project. Right now, we'll launch one in Lisbon, hopefully when it's approved, and hopefully next year. And we see that as a really good opportunity for one side, because you can sell lifestyle. It's good for the final client. You'll have or office or commercial or an hotel in the neighborhood, and it's easier to sell. You increase the pace of sales from the resi side. And for the investor side, it's also a way to can sold plots and diversify a little bit the risk that you have there.
And just by definition, does that mean that you're working in the larger cities, Lisbon, Porto, because you need that kind of scale? You've got to work with a city in terms of the place making those elements, or is it also smaller locations? What's the situation?
Right now, we start to have large-scale projects in the outskirts of the cities. We have a big one in Loures. We bought there right now another one in Loures. We have also one in Almada. We bought some time ago a project in Oporto. We would like to invest there in Oporto and Gaia. And also in the cities, I think it still have opportunities to invest there and to development projects there.
Okay, good. It would be interesting just to pick up with you, Francisco. You mentioned obviously in the introduction about the preference for living, but you'll obviously know the financing market incredibly well here generally. So how do you see living within the context of the financing sector more widely? Is there an appetite for living over some of the other commercial ones? How do you see that?
I mean, here in terms of the the financing market, the living component is dominating in terms of amounts, and particularly and it has been in the last few years the more attractive for instance, a segment where Duarte is operating, which is build to sell segment. I mean, we see an increased number of projects also, of course, in hospitality related to tourism, because it has been one of the areas of extreme growth in Portugal. Office is also a sector growing. In terms of our activity, I mean, it is really dominated by residential, build to sell, hospitality, and on the other asset classes, mostly refinancing assets that are existing and operating and that have good tenants, good yields, and relatively lower loan to values. In the end, our focus is really on senior lending. We are a fairly conservative bank. We have to offer an agile decision process, at least in our mind, and we are able to provide large amounts of financing at very competitive costs. I mean, we have seen the market going up and down in a long time. In the last 10 years, real estate has been the sort of the place to be, but this is a cyclical sector. One day the tide will turn, so it is important to focus on the fundamentals. So when that happens, we are not seen naked.
Yeah, and it was very interesting, I thought, yesterday to see the slide where the comparison between what everybody was concerned about, where financing had been relatively high last year and was almost the lowest this year in comparison. And we've certainly seen that across all of the sectors where we're looking in, that financing has suddenly become much easier in terms of access. But is that true, Vanessa? That would be my question to you. Because obviously you're investing with equity, but also financing, you're taking financing as a borrower. So how easy is it, and how do you see that across the sectors? How does living compare?
Well, I think as we've moved away from the peak of interest rates in 2023, certainly there's been massive improvement in 2024 for financing. And I think so far 2025 has been an excellent year to either refinance or finance. And I would say it's almost across the asset classes. So as long as your asset is good and your cash flow projection works, it's been a very good time to look out there for financing. It's true that senior lenders continue to remain focused on cash flow and low LTV. So for things that are not plain vanilla, the alternative lenders are very much needed. But we are seeing a great comeback by senior lenders, and maybe this is a bit more in Spain than in Portugal, but we are seeing the Northern European lenders become really aggressive, actually.
Okay. Interesting. Yeah. You're nodding there, Juan, as well. So
just I can share an example. We just closed our financing for our core fund. It's essentially 40% loan to value. It's around 450 million, talking about your point about northern banks syndicated by the Dutch bank and the French banks, including Portugal. And you're talking about margins in the order of around 150, 160 bips, which for Portuguese market and for a potentially forward fund, which is not a full development risk, I think it's very competitive. And I think it's probably, if we would go through the same exercise again today, probably we can achieve probably another 20 bips from that margin. So it kind of shows the competitiveness of the lending market.
Yeah, I still think that PBSA is probably, it's a bit more expensive to finance than BTR. So BTR, we are seeing really margins and arrangement fees coming in super rapidly. And hopefully PBSA is going to follow a bit of the same trend. Let's hope.
Okay, good. Anyone can feel free to pick that up if everyone has got a view on it. But it was interesting to see Paolo mention in his final slide there about one of the challenges being VAT, regulation in general in terms of the living sector. How do you see that? What changes would you want to see, I guess, to make investment easier for you and for your investment committees here?
Right now, what we see is increase in the construction costs, and of course the VAT there. It's a big part of the deals, and also from the regulatory side, it's quite difficult to understand exactly what they pretend. For example, we have in Portugal every apartment need to have a bathroom to wheelchairs. Even if it's in the 28th floor, you need to have that in all the apartments. And that difficults a little bit the construction. We need to have one car park per apartment, also increase the construction. So we have a long way to do to turn the product more easy to construct and to be more competitive to sell in a lower price, specifically for Portuguese people.
Okay, any other views on that? Fred, yeah, go ahead.
Yeah, I think specifically on the BTR, I think the biggest enemy of BTR is BTS, because BTS is performing well. And the other enemy is the way you structure your forward sale, right? Because people here pay at the end, right? Whereas in some other country, people are paying during the construction, which obviously reduce the equity you have to invest as a developer and can make the transaction, better and even a bit cheaper, right? So I think the way the payment schedule is made, has an impact on BTR.
And do you think that there's a chance that there's going to be some change in terms of regulation? Is that something that's going to be able to encourage and maybe move more people into the market? You may not want more competition in the market, Fred, I don't know, but...
To me, the payment schedule is more a commercial issue than a regulation. I think, regulation across Europe, it's always very complicated. There is no easy place to get a building permit. And across Europe, you still have, this handicap bathroom, same the parking, all of that is from the 90s. Yes, we would love to have, regulation more adapt of today's need, but, that's, you cannot wait for regulation to change, right? Otherwise, you don't do anything.
Yeah, go ahead, yeah.
Well, I think, it's it's a bit of the same story across Europe, that we need to simplify and reduce the red tape. And I think it's also part of the Draghi memo, that we should be all trying to do that. And certainly for Iberia, red tape with public administration is what is also causing an increase in the costs for developers. And at the end of the day, that will impact directly consumers, because they're going to have to access product which is more expensive. That and the tax load, which is really high. So if we are all really committed to affordability, I think it should really be a 360 sort of approach by everyone.
And Juan, you want
so maybe just to leave a positive note to a very sensitive and complicated topic. I think from an investor perspective, and we are a big affordable housing developer and operator, there's a huge amount of institutional capital trying to access this market in Portugal, in Spain, in the Netherlands, elsewhere, right? There is a maturity of the capital that understands that they need to allocate funding to this sector because it's needed, it's good investment, and so on. So I think we have an opportunity today to capture that equity. I think we need to work on all the elements that Fred was mentioning, but that's just to say there is money out there looking at this. In the previous cycle, I think we had an amazing opportunity where interest rates were zero. We could have built cheap housing forever and ever, and we didn't do it, but there was no equity understanding of the need, right? I think we all need that. We all now agree here we need more housing. So I think hopefully we can work between the private sector and the public sector to capture that opportunity.
Yeah, and you can definitely see that across the whole of Europe as well in terms of affordability. And it's interesting to see also how that's then playing into sustainability, because if you can reduce the bills, the operating costs for a building, then that also makes it more affordable. So it's interesting to see how decarbonisation, social impact strategies are also playing into that. And Francisco, is that also something that plays into the financing side? Is there a positive kick for people who are doing either more, lower carbon or social impact strategies in terms of the financing side?
I mean, today, by regulation and also by adaptation of the market and the social conscience about it, it is a must-have in many areas, and in our specific case, it implies for the best rated projects in terms of energy efficiency or natural resources. Good usage, it can imply a cost reduction of about up to 25 basis points. I would say typically. I mean, on the regulatory issue, I would also like to highlight something which is important for us and for all investors in the room, and particularly for the ones that are not that familiar with Portugal yet, is that, definitely one of the critical issues is the licensing time. So we don't take licensing risks, and that is something that in the end, despite the announced simplification, continues to be a very long process and especially very unpredictable. So when you're talking with patient capital, the one that is here for ages and that can live and wait 5, 10, in some cases, and I see faces in the room that have been waiting for very extremely unattractive projects to be authorized now for more than 20 years. It can work, but for institutional investors, that is something that doesn't work and wait, and in the end, it also increases the costs. Another area which is also important to remind, on the BTS, the market is very well developed and functions very well, but on the build to rent, it's almost, there is a pent-up demand and continues to be very difficult because of the regulation, the leasing regulations. Favor very much the ones that don't pay the rents. So you can have problems and be 3, 4, 5, sometimes more years to solve the situation. So that's an area that even if the current government solves it, then the next one, if it changes more left again, it will reverse it. So that doesn't build the confidence, and that's an area of the market for affordable housing that is extremely limited.
Yeah, that's a key point as well for those who are looking to invest from outside Portugal into Portugal, just in terms of how they're actually going to get the returns that they want. Now, if, for example, you're sitting there thinking, oh, this is great, but why doesn't he ask this question? So if that's happening to you and you've got a question that you think I should be asking, now's the time to do that. Stand up, put your hands up, whatever is necessary to ask that question. Otherwise, I'll assume that you haven't got a different question and I'm heading in the right order. But if you've got a question, now's the time to do it. I'm going to have a quick look. Has anybody got a question? If not right at the moment, you've got about 5 minutes. So come up with it and let me know. Let's look a little bit to the future. And I was interested in the presentation as well, looking at some of the areas that were coming up. So if we're looking at sectors, for example, where do you see things like, where do you see affordable housing versus student housing versus, interesting, and there are healthcare investors here in the room. So healthcare, senior living. We're also one of the founding partners of the Senior Housing and Healthcare Association for Europe, and that's growing hugely at the moment, just in terms of an indication of where we see things moving. So I suppose, where do you see, if we're looking 2, 3, 4, 5 years ahead, where should these people be investing? What are the sectors that you think are going to be attractive then?
Are you looking to me?
Yeah.
So thank you for the question. It's a very good one. I think if what we heard in these 2 days, which by the way is super interesting, is we're getting older. We need housing. We need cheaper housing, and the economy keeps growing. The investors follow the structurals. So I think the investors will try to find ways to benefit from that structural growth. So I think sectors like, again, flexible living, which in a way it comes halfway between student housing and housing, will benefit because the regulation essentially benefits those sectors. If you can find development, student housing is going to be a good place to be, if you can find the land and you can build them. I think on affordable housing, and we're a firm believer of that, I think my fear is that it will require so many changes, right? And it takes so much time that probably the opportunity is there, but you cannot capture that good enough. And then maybe just a final note, I think a little bit about more the suburbs, right? Where the mass needs are probably there, and probably their land values are typically lower, hopefully a little bit cheaper to live. And I think the pressure that we have in the inner cities of Lisbon and Porto would probably need to go somewhere. So that's going to be my 3 to 5 year outlook. So I hope my colleagues don't let me look that bad now.
Okay. Good. Who else has got a view?
Yesterday we were speaking about over-tourism. So I think, hospitality, we need to accommodate all these tourists so that it does not feel, do not feel the weight of these tourists. So obviously, hotel, hospitality is still, a trend coming in. Any kind of living, right? Because as everywhere in Europe, there is a big imbalance, and the balance, touch everyone. So I think any kind of living makes sense. And again, if you are in the right place, the new office, right? The new office to accommodate people, so that people are, like to go to the office and enjoy to be in the office. So basically anything.
Good. Duarte or Vanessa?
We still invest in build to sell and also hospitality. We will launch our brand of touristic apartments in the beginning of next year with a project that we will open with 36 touristic apartments, and also hotels and hospitality, student housing. So everything that is related to living, it's an opportunity for us, and we are really keen to start investing more in this segment.
Okay, good. Vanessa, is it going to be living? Is it going to be logistics? Is it going to be data centers? What's going to be the...
Well, I think I stand by what I said at the beginning. So we have currently for Portugal like this three-pronged approach. I think I'll take a different tack in answering the question. And I think really for Iberia, so not just Portugal, but also Spain, I think the aspiration that we should have is really to become a staple of institutional and private investors' portfolios. So not just a tactical play, which has very much been the case as both countries sort of joined the the European Union and then sort of coming out of the GFC, it's really been, you know, if I look back for the past 15 years, it's so far been, you know, an in and out story, sort of tactical based on where demand was seeing and the trends, but I have to get out rather than just being, you know, a very long-term play. And I think that should be our aspiration. And certainly I find that there's not been a better time in the past 15 years to raise equity for both Spain and Portugal, and we need to be able to channel that.
And sorry about banging on about senior living for a minute, but I just want to say in the UK that the interesting point about the crossover there between, I guess, almost the tourism side of it, and then living, so kind of lifestyle residential. That's where you're seeing an increasing amount of development in the UK, which is not care homes, which is very operator light. And it's actually much more, it's closer to that kind of tourism element, if you like, than it is to care homes and that kind of thing. So very interesting to see that. And I noticed, Vanessa, that Heinz, I think, is opening their first one in Italy in terms of Southern Europe. So maybe next year we'll have a longer discussion about senior living here. Who knows? Good. Last point from here is if there are people in the audience who are wanting to buy or sell into these living assets, are you selling? Are you buying? Are you holding? Or indeed, I suppose, if they wanted to finance, Francisco, would you finance everybody in this room? That's the question. So buy, hold, sell, where are we? And it's a one-word answer, just to clarify.
Buy.
Buy?
Buy.
Yeah.
Both.
Okay, all right. That is a one-word answer, so that's allowed. Yep.
Bye.
Buy?
Depends.
Very good. We're going to have a final woo clap question as part of this session, which I think will be arriving in a second on your screens for you to join in on, just to be able to see where we are, whether or not we've convinced you that living is the one. So here we go. It should be appearing. It is, great. Rank your preferred investment sectors, first to fifth. Oh, now that is quite complicated, isn't it? But we'll do our best with that. So retail, logistics, offices, hotel, living. In fact, we can, let's see how many people can pick this up quickly. Vanessa, what would you be voting for in that, would you say?
I think it would be living to...
Living number one?
Yep.
Okay. Interesting. I'll be interested to see, and I shouldn't really mention this, but I will be interested to see what's happening in terms of retail, because again, from the conversations we've been having, you know, whereas before retail was looking very tricky, it's beginning to be a much, much more investable sector. Okay, so is it telling us the results? Is it me, Roger? Am I not understanding it?
What is that?
Ah, here we go. Okay, great. All right, living.
So we want to live longer.
Retail. Okay, we will leave it briefly. I've still got 2 minutes, 55 seconds left. So I just wanted to pick up on one thing, and then we'll come back to this in a minute's time. Because you've obviously got, like, for example, Vanessa, you're also investing in other areas. So, you know, you are investing here in Portugal, but how does it compare to the other markets that you're investing in? Do you see this as currently far more attractive? Are you encouraging more capital? When you're in investment committees and you're saying you should really put all of your money into Portugal, what's the view?
Well, I think certainly when we go to investment committee, we compete against all our European counterparts for deals. So we can only channel capital into Portugal if it makes a lot of sense. I think with interest rates maybe not moving a lot further down beyond where they are currently, it's really a story about generating NOI. And in that sense, it's quite easy to sell the story that NOIs can be growing in a country like Portugal, where you see the macroeconomic story, because we certainly at least have quite a lot of pains of convincing IC that cap rates can continue to compress further and further if interest rates are not going to be going down much further, right? So.
Okay, good. Easy to get capital to commit at the moment. Juan, what's your take on that? And Duarte?
I think the helicopter view is yes. Then when we go to country by countries, I think in my opinion, the jury is out there. I agree with Vanessa. The growth story in Portugal, it is interesting, as in Spain, but there's also a basis story. I think, how much are we paying for the assets that we're buying? And the reality is, some of our friends in the north are not having a great time, and some windows are also opening there to invest in Northern Europe that before. That's the other side of the success story of the South, right? So I think, yes, and before you needed to explain Portugal, now you don't have to do that. The growth is there, but we are also very careful about that we try not to overpay vis-a-vis other investments that we have in Europe.
Okay, good. We are officially out of time. I would like to introduce Roger back again. From my point of view, I'd like to say thanks very much for inviting me to be back again. I always learn a lot from these sessions here, and my understanding of the market improves each time I'm here, despite the fact that I called it Poland at the beginning, so apologies for that. Thanks very much, everybody, and thank you to the panel as well. Thank you.